BlackRock just published their 2025 Global Outlook report where they lay out their predictions about the stock market and the economy for 2025. And according to BlackRock, we are entering a quote, unusual environment where the economy is transforming and reshaping markets. And then BlackRock explains how they're planning to invest their money based off of the changes that they're predicting in our economy. Now, the reason you might want to pay attention to this is because BlackRock is the world's largest asset manager. They're managing trillions of dollars, so when they move money, your portfolio notices. Now, I've already spent the time analyzing BlackRock's report and I'm going to break it down for you here, but if you want to read it for yourself, I also linked it for you down in the description. There are three main takeaways from this report that I'm going to highlight in this video. Number one, BlackRock says that there are some mega forces that are reshaping our economy. Number two, BlackRock talks about the economic risks that they're seeing in 2025. And number three, they then talk about the investment opportunities from all these changes in the economy. So let's break this down, starting with number one, the mega forces that are reshaping our economy. But first, I want to remind you that on January 7th, 2025, I am hosting a free and live and virtual wealth building workshop where I'm going to be going over how you can grow and accelerate your wealth in 2025, meaning how do you create a system to invest your money? And then how do you find good investment opportunities in this changing economy in 2025? And then finally, I'm going to be going over how do you actually research these investment opportunities. This is going to be a value-packed workshop. I'm going to be going over so many things. It's going to be a lot of fun. So if you have not registered yet, make sure you do so because there's a limited number of people that can join me live. And I'm going to be doing it twice on January 7th. Once in the morning at 10:30 a.m. Eastern Standard Time, and then again in the evening at 8 p.m. Eastern Standard Time. It's live on January 7th, so if you want to join for free, all you gotta do is click the link down in the description below. BlackRock says that there are mega forces like artificial intelligence which are transforming economies. Now, unless you've been living under a rock, you've already heard of the AI boom, but let's quantify this. Take a look. This chart shows how much money is being invested in research and development between 1960 and 2024. The yellow line is the government, and the red line is the Magnificent Seven, and you can see this aggressive investment by the Magnificent Seven into technologies. The Magnificent Seven are 7 of the largest companies in the stock market, which include Alphabet, which is Google, Amazon, Apple, Meta, which is Facebook and Instagram, Microsoft, Nvidia, and of course, Tesla. And what BlackRock is highlighting is that these 7 companies combined are investing about $400 billion a year into frontier technologies, meaning these 7 companies are investing hundreds of billions of dollars every single year to grow things like artificial intelligence. To put that into perspective, the amount of money that these 7 companies alone are investing into technology is about the size of Norway's entire economy. And the reason why these companies, along with many others, are investing so heavily into technology and AI is because they're fighting to be the front runner in AI and technology. And this technological shift is what BlackRock says is creating a mega force in our economy because number one, this shift and investment is creating new jobs. In fact, according to Hiring Lab, AI-related job posts are rising, and 2% of all jobs posted were AI related versus just 5 years ago when virtually nobody even understood what AI was. And in addition to creating more jobs, this investment into AI has also been creating an investment boom. What we've seen over the last couple of years, anytime a company introduces a new artificial intelligence into their company, into their software, their stock has boomed. Now, of course, some people are worried that this could be creating a bubble in the stock market, particularly when it comes to AI related stuff. But there's no doubt that there's a real use case for artificial technologies which can make work more productive. Goldman Sachs is even projecting a 15% boost in GDP from AI over just the next 10 years. So according to BlackRock, new technologies like AI is a mega force because it's changing economies, it's changing jobs, it's changing investment values, and it's changing how companies operate and how they can be productive. Which then brings us to number 2, economic risks that BlackRock has highlighted. Here's a chart that BlackRock published to lay out all the possibilities that could happen. It starts on left with this question: will economic growth be weaker than before the pandemic? Yes or no? If yes, then it goes up this way, meaning if growth is weaker, if the economy is not growing as fast, then it goes through the different possibilities, such as will yields be higher, meaning will interest rates be higher than what markets are predicting right now? if interest rates will be higher. Then it goes through what happens if valuations and AI stocks are overvalued. If they're overvalued, we will see a hard landing. If they're not overvalued, then hopefully the strong corporate strength that we have here in America can keep the stock market strong. But if the economy becomes weaker and interest rates do not go higher than what markets are predicting, then we're going to see slower growth and high inflation, which is bad for stocks and bad for bonds. But if now, let's go back to the original question. The economy is not weaker than before the pandemic, meaning the economy grows faster than before. We can go downwards now. The question that they ask is, will we see a recession over the next 12 months? If no, then the economy will continue to grow because the supply issues that we've been seeing will ease, so the stock market and the bond market will rally. But if we do see a recession, then we could see a rescued hard landing, meaning the Fed comes in and bails us out, but the stock market would still get hurt, while bonds would benefit, according to BlackRock. Again, if you want to see the chart for yourself, I have the link for you down in the description. So what are the risks that we have in our economy? Well, this is what BlackRock highlighted. 4 things. Number 1, there's a risk that our economy will go down. Number 2, there's a risk that inflation will continue to stay stubborn. Number 3, there's a risk that we have a valuation bubble, that maybe some of these stocks or AI stocks are overvalued. And this plays into big part of how everything else plays out. And number 4, there's a risk with interest rates that we get them wrong. Starting with the economy, we know that our economy runs on spending. And if Americans can't keep spending money, if that were to slow down, that could pose risks in the economy. But that also ties into inflation. Inflation hasn't gone away. We know that inflation is still a concern. And the problem with inflation is inflation makes consumption more expensive. And so if Americans cannot continue spending money because inflation is outpacing their wages, eventually Americans won't be able to spend more money, which could cause pain in the economy because of that inflation. Then of course, number 3, we have this valuation concern, which is, are some of these stocks overvalued? Are some of these AI stocks overvalued? And this is where BlackRock says this is going to vary depending on everything else that happens here. Because if the economy keeps booming, we don't have a valuation bubble. But if we start to see some concerns in the economy and interest rates go up, well then maybe we'd see these valuations fall. And maybe these AI stocks would be overvalued and we see a crash. And then of course is interest rates, which is kind of the backbone for a lot of this, which is the Federal Reserve Bank is working to moderate interest rates to manage the economy, to manage inflation, to manage valuations. But will they get it right? We don't know. So now that we understand the risks that BlackRock has pointed out in the economy, let's talk about how they are proposing to invest their money in 2025. Now I gotta give you the disclaimer, investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube or some random article on the internet or a random hedge fund. This is what BlackRock says in a nutshell. We BlackRock remain pro-risk and we further upgrade US stocks thanks to United States corporate strength. So BlackRock says that they're still bullish on the United States economy and the United States stock market. But notice how they said this very specifically, that they're focused on the United States stock market, not foreign stock markets. Let's dig a little bit deeper. BlackRock says this: we think US stocks can keep outperforming. US equities have outperformed the rest of the world, fueled by robust corporate earnings, and as you can see in this chart right here, the United States is the red line, the rest of the world is the yellow line. Stocks in the United States have outperformed stocks around the world. This is why BlackRock says that they want to continue investing in the United States stock market, because they believe the United States stocks will continue to outperform the rest of the world, but that doesn't mean that they don't see opportunities in stock markets elsewhere. Let's dig deeper. But first I want to remind you that if you do want to stay up to date on what's happening in the financial markets when it is happening, my team at Briefs Media also publishes a free newsletter called Market Briefs. It's completely free, and I have that link for you down in the description as well. According to the report, BlackRock says that stocks are relatively cheap in Europe. And these stocks, which are relatively cheap, might be poised to benefit from the AI rollout that they're expecting to see even more of next year. We see opportunities and relatively cheap valuations in Europe, particularly in financials and European beneficiaries of the AI build-out. Meaning BlackRock sees some investment opportunity by investing in some European financial companies like bank stocks, and potentially investing in some tech companies that will benefit from the AI rollout. And then they also mentioned Japan. A brighter outlook for Japan's economy and corporate returns, including stock buybacks, are driving improved profits and shareholder returns. So BlackRock is hoping that in Japan, if more companies start to do stock buybacks, that could help help the returns and stock market growth of the companies in Japan. Now, of course, investing is risky, but you should also understand that investing in international companies and stocks is even more risky, which is why, again, you want to make sure you do your own analysis, you do your own due diligence, and you understand what it is that you're investing in. A lot of times I hear stories of people just throwing their money into a hot stock that they heard on Reddit or whatever community online, and then they just hope that the stock is going to pop off. That is a very risky game. You are gambling and you are not investing. If you want to be an investor, you should be investing for the long term, and you have to know your strategy. That's why I say for the average person, one of the best games that you can play is just invest your money into the market, something like the S&P 500 or total stock market, and you just keep ABB, always be buying. You buy when markets are up, you buy when markets are down, you buy when markets are sideways, because yes, we will see a recession, but if you just keep buying, you will continue to build wealth over the next coming years and decades. But if you want to be more involved, this is where you need to invest your time into your financial research and your financial education. And again, I have a couple resources for you. Market Briefs is my free newsletter. I have that link for you down in the description. And on January 7th, I'm also hosting my free and live workshop where I'm going to be going over how you can build wealth in 2025, how you can find investment strategies, and how you can actually research these investment strategies. It's completely free, and I have that link for you to register down in the description below as well. This long-term debt cycle, if it happens every 50 to 100 years, you might only live through one. We've seen how these short-term debt cycle recessions work. We saw it happen with 2008 with the Great Financial Crisis. So the question you're going to naturally have is, where are we on this long-term debt cycle now? Back in 2019, Ray Dalio said that we are very late in this debt cycle. So what does very late mean?